Hello and welcome everybody to today's Commodities Corner presented by the Gold and Silver Club. So today, guys, we shall be going through the following. We'll be going through live market analysis, a watch list of trading opportunities. We'll go through a forecast of where we expect gold, silver, and also crude oil to be heading next, answering questions, and of course, providing live support. So just before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading, as international respected experts. Our analysis and our opinions on the metals, the energies, and the agriculture markets, they're routinely sought by major financial television channels and publications, which includes Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Of course, it's a pleasure to be here on binary.com too. For further information on the Gold and Silver Club and our expertise, please do feel free to visit our website, which is www.thegoldandsilverclub.com. Okay, fantastic. So with that, guys, there's been a lot happening over the last week that we want to fill you in on. As always, feel free to post your questions into the chat section there. We'll keep it very interactive. Contributions are always very welcome. So last week we had the FOMC statement, which certainly caused some volatility. We saw quite a considerable breakdown for gold after it had broken out previously to the 1300 level. We saw the dollar index gain strength off the back of the Federal Reserve increasing interest rates, and with that overall a hawkish tone as well from the Federal Reserve, which has been confirmed over the course of this week by several FOMC members speaking as well. As a result, we saw gold price break down from retesting 1300s or just under that price over the last week and a half or so, but gold has found support in the last 24 to 48 hours around $1,240 per ounce, and is currently staging a recovery, which we'll take a look at very shortly on our charts. Silver is also surging today, and the US dollar index has been selling off. So we'll take a look at that shortly. Crude oil, I'm sure a lot of you are aware who trade commodities, has had a very significant decline now. It's in fact broken down over 20% off the February highs as fundamental data continues to be negative on the price. We continue to see an oversupply in the market. Oil breaking down to 11-month lows this week. Libya aims to boost its production by 1 million barrels per day by the end of July, whilst Nigeria also sees a strong recovery. That overall has lent to more downside for oil. It's been good to take advantage of continued downside for the oil market. So hopefully that just gives you a little bit of insight into some of the headline news over the last week. We've been capitalizing on that via our trades at the Gold and Silver Club using our exclusive research-driven strategies. So entering into, as well as sell shorts on oil, buys on gold and silver. So we entered into a position on crude oil, coming out of that for another full trade for the price to be lower, which increased in pace to the downside after we had the oil inventories this week. So essentially looking for a full trade for the price to go lower. We've also entered into fresh positions to the buy side now over the last 24 to 48 hours in both gold and silver, taking advantage of the breakout. We'll discuss how much legs we feel is behind this move shortly when we go onto the analysis, but essentially we've had profitable buys now on gold and also on silver now, taking advantage of the breakout after we come into some major levels of support over the last 24 hours here. I do get asked a lot how you can get access to our trades, how you can get access to the specific entry, exit levels, all of our analysis during the week. I will just pop that into the chat there for you guys. It's www.jointhegoldandsilverclub.com. Once you complete the application form, you'll get full details of how you can become a member of the Gold and Silver Club, get access to all of our trades. Okay, we'll cover that a little bit later, but just to give you the heads up on that. So what have we got coming up over the course of today? Well, in approximately an hour's time, we have quite a lot of data coming out, which should impact certainly the US dollar and gold and silver as well. We've got the PMI numbers coming out at 2:45 London time, which is in 40 minutes at 3 o'clock London time. We also have new home sales, which we should see that have an impact on gold, silver, US dollar. We've also got 3 members of the Federal Reserve speaking today. FOMC members are speaking, which again, look to the US dollar, look at gold and silver. We have to be quite nimble around these news items at the moment because we are seeing that have quite a big impact on the US dollar, gold and silver. So although we're seeing a surge at the moment, just be aware that these sort of news items later on in the day could cause volatility, and also the US Baker Hughes oil rig count will likely also cause a bit of volatility for oil as well. So we'll take a look at that when we move over to the charts. So with that, we'll talk you through exactly what we're looking to do here on binary.com. Essentially, we take advantage of either the higher or the lower type of trade on binary. So everything's very transparent. You know what your risk is. You know what your stake is on the trade, what you could lose, what you could make, as I'm sure a lot of you are aware. So whenever we take a trade on binary.com, we are looking to get 3 criteria points correct. Entry, of course, exit, so the timing of the trade, and overall direction. In that sense, it's very straightforward because you don't need a stop loss, you don't need a take profit target on your trade, you don't really need to be monitoring and constantly in front of the screen when you're taking this sort of trade. It's very much set and forget process for doing this. You can do it shorter term time frames if you're trading news items, you want to be in and out quickly, you want to be nimble over several minutes or just a few hours, or you can look at longer term swing trades if you've got a view of the market. If you expect the price of oil, for example, to be lower this time next week, you could look at lower types of trades like that, more swing trades as well. You can take advantage of all of that. So just as an example here, you can see we're looking for a trade, for example, on gold there, 5-hour time frame, payout 5,000, deposit is £2,843 and 26 pence. If we look for the price to be higher, for the price to be lower, payout of 5,000 for a deposit of £2,853 and 1 pence, and we would be looking in that scenario for the price to be lower, depending on what we're looking for the market to do over that time frame. So again, higher, lower. I'm sure a lot of you are aware of this already, but if not, there's just a quick recap of that. We're looking for either mainly rise or fall trades, very straightforward. We just need to get the timing of our entry right, the timing of our exit right, and also the overall direction that we expect that market to go. Doesn't involve stop losses, does not involve take profit. You know what your risk is up front. Okay, so with that, we'll move over to the charts, guys. Hopefully you won't lose any sound. If you do, let me know. Hopefully the sound is good and clear. You're not cutting out at all. So we will move over to my screen. I'm going to share my screen now, so you should be able to see my screen at the moment. Quick check-in. You can see the gold chart at the moment. That'll be perfect. Thank you, Sharice. Okay, good. So let's get into it. There's a lot happening at the moment that I want to put on your radar and that I want to draw your attention to as well. This is gold on the weekly chart, and you will note that it has formed a bounce off quite a key underlying trend channel. So it's come all the way down for a retest to $1,240 per ounce. But so far, it's getting a bid at that level. We've now seen a gain over the course of this week from the lows there. It's almost about 160, 170 points off the lows there, or $17 move for gold from 1240 up to 1257. So right at this point, we are seeing a rejection candle form off an important underlying trend channel for gold, where if we break above last week's high or this week's high next week, we could be looking for some additional follow through and some momentum to the upside here. So we seem to have come into a key area of support now for gold, where we could anticipate the potential for a bounce higher and more follow through as we go into next week. We'll be watching to see how this closes. Now, it's early days at the moment. It's 2 o'clock London time. We've still got approximately another 8 hours until gold will close the day. It could still change. It may not close like that at the moment. That's how it looks right now. On the daily chart, we've had this pop to the upside in price, where we've actually got long ourselves now on gold. We've stopped selling into this market, where we've been taking advantage of the breakdown since the FOMC statement last week. We've now banked all of our profits on the sell side, reverse position. Now we're long on gold at the moment, but we're not necessarily expecting this to be a huge rally at this point, but we're just taking advantage of this pop, some short covering at the moment, potential for more upside. I'm targeting between 1260 and 1270 short term, although I'm not ruling out the possibility for gold to break out significantly higher than that. Which brings me on to my next point of analysis here. Hopefully this is not going to interrupt the sound, guys. So let's see if we can bring this up without any interruption to your sound. I will just show you here on the left, and hopefully this won't interrupt sound. If it does, let me know. On the left-hand side, we've got gold priced in Australian dollars, US dollars, which is really leading the move here. That's already about 2 days ahead of gold priced in US dollars. On the right here, we've got gold euro, which is lagging behind gold priced in US dollars. But essentially, you go from left to right, Gold price in Australian US dollars pop first. We started to see this breakout at the beginning of the week, V-shaped reversal pattern, bit of resistance at the monthly pivot. I'm looking for more follow through now. If that continues to break out and follow through, gold US dollar, you would imagine it would also get some good follow through and get bid up as well. And gold euro is basing at a key level of support. Okay, so just for a little bit of confidence there to see what is going on with gold price and some other currencies. So overall, right now, my view for gold is bullish. I'm looking for higher prices, although you want to time your entries correct. You don't want to get right in at the daily highs. You want to get in at the relevant levels, but also look for opportunities next week. If we close with this rejection candle at the lower end of the trend channel and we break above this week's high next week, I would suggest that's going to have more follow through and offer an opportunity to also take advantage of a further move to the upside. Now, moving over to silver, I find silver's price action very interesting here because we've been watching these levels off much higher time frames as well. This is silver off the monthly chart going back over 12 years, and you can see more recently we've been forming a very clear pennant on the charts. You've got higher lows, lower highs, and silver is getting really within the apex of the pennant where it's been consolidating. Price structure is getting tighter and tighter to a point where we should see a breakout soon in either direction. So I would imagine we'll either get a breakout to the upside or the downside, but we have a lot of underlying support. If you go over to the monthly chart, we've bounced off the lower end of this major support channel, which had broken out of at the end of 2015, and we are coming to the lower end of this supported channel. And I would suggest from a longer term investment point of view, this represents a very good area of value to pick up a trade. Reason being is that really you only need your stop loss depending on how you're trading this. If you're trading it on binary, obviously you're just looking at longer term positions for the price to go higher. Other types of trading here, you might be looking just with a stop loss below the 16 level because it represents a good risk to reward for the potential for it to break out all the way to the upper end of the channel. Again, I'll take you out to the daily chart. We've essentially had a bid. Yesterday was where we got a confirmed buy signal. We've bought into silver now, so we're long at the moment. It could still change. It has the potential to change over the course of today, depending on how it closes, but it's quite oversold. We're getting a bounce at the moment. Short term, I'm looking for a move back up to the 17 level. At that point, we'll have to assess. We'll have to see whether we've got the legs here for gold and silver to follow through at this point in time, or whether we just see a pause, temporary bounce higher, and then another reversal. It depends on the US dollar strength as well, and it also depends on equities. So to a certain degree, we're seeing gold and silver move inversely to the S&P 500, to stocks overall, to Dow Jones. NASDAQ, they had a bit of a pullback yesterday. In the early part of today as well, we saw a bit of a pullback, which I'll move over to, although I think they're getting a bit of a bid at the moment. Let's have a look. Yeah, a little bit of support at the moment. So I think the S&P is just backing and filling right now. And in fact, on gold and silver, they're pulling back ever so slightly on lower time frames at the moment. A bit of a pause, probably ahead of the data coming out later on today. Short term, there's a buy here. Obviously, if you're going lower time frames, you're just looking at 1 hour, 2 hour, look to be in and out quickly. This is already a done deal in terms of the trade. You could be in and out already on this breakout on gold and silver, have profited from the move. But I am looking for some additional upside at the moment, providing the dollar does not completely break out and surge today. If we were to see that, I probably would lend some pressure to gold and silver. Again, we'll go over to silver on the weekly chart. That is a really nice rejection candle that has formed at the 76.4 Fibonacci retracement level, potential to bounce off that level. If we close with this weekly hammer here, we could start to see more upside if that gets breached to the upside next week. And again, we've got this major channel that a lot of traders are obviously looking at here. There's quite a lot of confluence at this level for silver, and I do like it across multiple platforms to take advantage of that breakout to the upside. But this is still early in the session. We've got another 8 hours until the close. It could still change. But right now, if this was the close of the day, if this was 10 o'clock London time or from 9 o'clock onwards, I would say that's quite a strong rejection candle that's formed, and likely we'll get a bid next week on gold and silver short term. So we'll see how this plays out over the course of the US session this afternoon. Oil, I do want to get quite deep into oil, so we'll have a look at oil here. Just bring it out for you. As you can imagine, we've been having a lot of questions at the Gold and Silver Club for oil because it's had such a significant move over the last week. So I've got some levels to go through with you for those of you who trade oil a lot. So I get the question a lot that oil, it's really oversold. Shall we buy it now? Surely it can't go down that much lower. What do you think? So here's what I think. At the moment, where we're sat with oil, this is the minimum target for the bears to be looking at, around the 42 zone. So it is a point that oil could get a bit around this level. It could find support around the 42 level. It is possible. However, we don't really have enough confirmation for that. We formed a doji candle yesterday, so essentially an indecision candle on oil, which formed yesterday. You can see that around key support around the 42 zone. So it could reverse from this level. It is one of the minimum targets the bears have been looking at. So the sellers have been looking at. We are quite oversold. So we could see a bounce back from this level. But if we break lower, we have the very high likelihood then of coming down to 41, which is the next key level of support, which is approximately around $2 lower than the current price. Below that, a lot of traders are looking at the 50% Fibonacci level, which is the swing low here going back to February of 2016 up to the swing high here of January 2017. That marries up at the 40.65 zone. I would suggest that will be a very key level. Below that, 40 is a very key psychological level of support. It is the level that was tested back in August of 2016. If we get as low as that, that could be a very good buying opportunity. I would say below 40, especially the sweet spot and the point which I would expect limited downside would be around 37 to 38 US dollars per barrel. I think short term oil would struggle to get much below that level if we did see a break to that zone. And I would suggest that it would look like this. It would come back towards the lower end of the trend channel on some sort of a breakdown lower. And this is the level, any level, in my opinion, below 40 we'll probably see oil not spend much time below that level. Possibly it will wash out the longs, so we might get some sort of capitulation move, break that below the longs. As we saw back here, the lower end of the channel, we had a capitulation after the longs really got flushed out, and at that point we will probably see a significant rally. So these are what I'm looking at: either lower, a further breakdown, wash out of more of the long positions here, and a lot of traders are starting to get short this trade because of the overall fundamentals, which is very negative for oil, where we're just continuing to see oversupply, or we could see a bounce from this zone where we are now, around 42. It is possible that the low is getting formed around the 42 zone. Again, it's the minimum target for the bears, which would be what they're targeting right now. For me right now, we don't really have enough confirmation to get into a fresh trade in either direction at the moment. I'd say we're just pausing at the moment around key support, where it's at a bit of a decision point where really it would need a fundamental catalyst in order to drive the price higher with oil at the moment. Each fundamental catalyst which has been supportive for oil so far is very quickly being overridden by the picture on oil, which is oversupply. Oil inventories keep coming in over expectations. We're just seeing that come through a lot. The last 3 to 4 weeks now, oil inventories have hammered down the price of oil where it's consolidated and look like it might be about to rally. Oil inventories come in every Wednesday at 3:30 London time, slams down the price again. So just be aware of that. Just be careful. If you are trying to pick a bottom, be aware every Wednesday, that's when you could see a very significant move in to the downside, which you can take advantage of by selling, or a potential bounce if we were to get a significant a deficit on the oil inventories, which comes out Wednesdays. The oil rig count today, to a certain extent, does move oil as well, although more recently it's not had such a big impact. It's more the oil inventories on Wednesday and comments from OPEC as well. I mean, there are a lot of speculation that OPEC are going to hold some emergency meetings to try and deal with the fact that oil prices are slow at the moment. So it is worth, because they're so low at the moment, so it is worth just keeping up to date on the fundamental side of oil, which can be a big driver if anything happens on that side. And we're looking at supply and demand, of course, and all the other factors which can affect the next levels. But in terms of major zones, I'm looking at 42 is the minimum zone that I would expect to bounce from. Then below those levels, I'm looking at 41, 40.65, and then really any level below 40, even if we get a breakdown to 38, would likely provide a very good buying opportunity. There will be a lot of investors who will probably likely pick up a trade around that level just from a longer term play. Below 42 US dollars per barrel would make sense, because really it's been channeling between those levels of about $40 per barrel up to 54 throughout the last year and a half or so. So it would represent an area of value in quite a significantly oversold condition. If we were to get down as low as that, we shall see. Okay, so that is what we're looking at with WTI crude oil at the moment. Those are the key levels that we are monitoring right now. We do know there has been an increase in supply again from Libya and also Nigeria, over the last week, which has caused additional momentum to the downside for this market too. Okay, and I'll tell you what we'll do. We'll also have a look at some of the commodity currencies as well whilst we're at it, just to give you an idea of what we are looking at here on the commodity currency. So if we just turn our attention over to US dollar, Canadian dollar, which has had quite an interesting pop recently off just some data which has come out within the last couple of hours. So if we have a look at US dollar CAD, has actually had another surge to the upside, so this does move inversely to oil as well. Not 100% correlation, it's approximately 60 to 70% correlation, closer to 70% actually, but essentially what you would expect to see is if the oil price is going down, US dollar, Canadian dollar goes up. If the oil price goes up, US dollar, Canadian dollar goes down. It has that inverse correlation. It's been ebbing and flowing quite a lot over the last week. We just had some data come out. I believe the CPI numbers have come out and just seen a bit of a pop to the upside here for US dollar, Canadian dollar, and that will be interesting to see if we get any additional follow through. There might be a trade opportunity on that as well if we continue to see a breakout here on US dollar CAD as well. So that's another market to take a look at. Also, moving over to equities, I've had a few questions on stocks as well, what we can anticipate next from here, whether we will see the potential for a move, a significant breakdown possibly here for stock markets. So we'll take you over to the S&P 500, also the Dow. So the Dow Jones is actually starting to roll over. We've had about 3 days now of consecutive breaks below the previous day's low here. So we are getting a bit overbought here, and it's starting to roll over. However, it's not, I would suggest there could still be a supported bounce here into the close. I always like to look at the close for the S&P 500, the Dow Jones, and so forth, because the amount of times that they look like they're going to break down during the course of the day and then into the close, they get bid back up, and then we see new all-time highs reached again. You want to be a bit careful when you're taking positions on these, but you do also want to monitor the fact that if we do see a breakdown in equities, most notably the S&P 500, a sell-off in the S&P 500 would likely be met with a breakout on gold and silver to the upside. We're not really seeing too much action at the moment, but essentially, if we break below this underlying level of support, especially if we close below the 21-day moving average as well, that should lend to more weakness with the S&P. We could start to see it decline significantly. We'll see how this plays out, and that would lend support to gold and silver as well. They would likely get a further bid to the upside too. So we'll be monitoring the price action on that as well. So lots for us to monitor today, especially gold and silver. I would suggest those are in play at the moment. You definitely want to just keep an eye on those markets as well. And again, guys, if you would like to get access to our trades throughout the week, if you want to be kept updated to our exact entry, our levels, how long we're going to be in the trades for, our analysis, our live trading rooms, all you need to do is go over to www.jointhegoldandsilverclub.com, complete the application form, and we will, of course, get in touch with you ASAP. What do you get by being a member of the Gold and Silver Club? You get access to the following. So you get access to our live trading room webinars during the week, which we also do for special events as well, like FOMC statements, non-farm payrolls, election webinars. You get real-time trade notifications of all the trades that we are providing to all of our members, exact details of where we enter, where we exit, a weekly trading plan with a watch list of trades for the week ahead, live trade support to help you through each trade, institutional level trading research and commodity insights to give you the edge in the market. So again, you get commodity research, all of our notifications, live trading room webinars as well, all of that by being a member of the Gold and Silver Club. Okay, fantastic. So with that, I wish you all good trading. Have a fantastic weekend, guys. Again, very much look forward to work with those of you who will be making an application to join us at the Gold and Silver Club. Any questions or any comments, feel free to send those across to office at the Gold and Silver Club as well. And we will catch you back here on the next one. Okay, thanks, everybody. Take care. Good trading, and we'll speak with you real soon. Okay, thanks, everyone. Take care. All the best. Bye-bye.